EOH announced sweeping changes to its leadership structures, including that its executive chair has stepped down. This as the group's investors look to revamp operations of the IT group. Both the resignations and appointments are with immediate effect, and Business Day's business writer Mudiwa Gavaza joins us now to unpack this decision, or these decisions rather. Mudiwa, an absolute pleasure. Good afternoon.
Good afternoon, Olutando.
Let's take a step back, Mudiwa.
Yeah.
Stephen Van Coller at the helm of EOH has been on what I would say difficult journey, cleaning it up. It seems it's cleaned up now.
The corruption part, yes.
Okay.
I think there's a lot of, I don't know how else to say this, but I think we're just at that moment where people are sort of grappling, you know, with what the legacy of the Stephen Van Coller era at EOH was, right? Because over that time, you had a cleanup around the corruption piece. But where investors are not happy is the value destruction piece. This is a company whose share price once traded at 111, rand a share. But that's a share that's now trading at around 1 rand 50, right? When Stephen came in, it was trading around 40 rand, and right now it's sitting at around 101 rand 50, right? So it's the value destruction part. People are obviously very happy that the cleaning up of the business was done, but where they have been struggling and clearly not happy is with the growth part of things, because there are a number of units that were sold along the way, right? Depending on who you talk to, it's the banks that have won, in this fight, because a big part of the focus was slimming down operations, paying down debt, and those things have been done. So where the real tension lies is investors, sort of unhappy about the growth profile of the business, and then secondly, the fact that we used to report about it when it was happening, but there were certain asset sales that were happening at the time, the likes of Cybrin. Those are businesses that were sold, and investors even at those times were saying, we're selling off some of the crown jewels of the business, the money-making parts of the business. But if you're trying to pay down debt, this seemed as if those were the levers that were being pulled. So big tensions, and right now I think everything that's happening, it just underscores, shareholder. Trying to use the right word here, but shareholder activism, that's the word that I will use. Yeah,
shareholders wanted to meet and have a conversation about succession planning on the board. We often hear about succession planning with executive leadership, but here, of course, the board needed a shake-up, according to shareholders. It is an interesting one, Mudiwa. Like I said, mostly I would come in, maybe you change the COO, the CEO, and maybe a chief strategy officer here and there. But the board, let's understand how they would also have to be, reconfigured for growth.
Cool. So where it was upon Stephen's exit from the company was Stephen left and there was no clear path as to who's going to be the next CEO. Because in a number of cases, when you have an announcement, especially for a company like EOH, when you have an announcement to say that Stephen is going to be stepping down, at the end of his term. He had a 5-year term. And even after the end of those 5 years, right, there was still no, clear path as to who was going to replace him. So they extended his contract by another 6 months. And even at the end of those 6 months, right, which was March of this year, right, there was still no, clear, who's this next person who's going to take over. So what we saw at the most recent results presentation was Stephen presenting a case to say, I'm on my way out, but we have left business unit heads, the likes of Marius Del Rey, Fatima Newman, and others, that strong team that were there with the development of the strategy. So we've got leaders in the operating businesses, and we are happy, with that part, But the real vacuum was at the group level, which is why Andrew, who had been chairman up to that point, was then made executive chair as they were waiting, to solve that piece of their leadership vacuum.
So now, I mean, of course, an EOH of the future has to be imagined, and I guess that's why we're also seeing this leadership shake-up. Do we have new appointments? Where are we in terms of appointing people who will come with the ideas, Mudiwa? And most importantly, more than ideas, what EOH needs is a balance sheet. That's what you need if you want to grow.
That's what you need, you know, if you're going to grow. But I'm not at least with the investors that we've spoken to, because we've spoken to a couple of the investors that are now part of the board, the likes of Reese Summerton, the likes of Dennis Fenter, who are now on the board. They spoke to us and they said, listen, we understand that you're going to need money to fund growth, but right now it's a bit tough, you know, as to where you get the funding. So one of the biggest things that they want to address is costs. You know, they feel like there's been too big of a cost structure at the head office. That's one. They feel like a lot of consulting fees, all of this stuff, that EOH is paying way too much for all these things. They want to cut, you know, along the way. And then I think the other pieces that they see are Yoko, which is the biggest piece of the business, as well as the international part of EOH, as being the two parts of the business where they say, okay, fine, this is where we think growth is actually going to come from this business. And Maurice Delaray, who is now the interim CEO, he's actually been the one running that Ayoko business. So it seems, you know, at least for now, that's the type of strategy that, you know, we're looking at. And a couple of the appointments that have been made, the likes of Reese, the likes of Dennis and others have decided that they're not even going to take board fees. Okay. You know, their approach is, we will get what's due to us from share price growth. Okay. Right, so that they demonstrate that what they are after is an appreciation of the company's value and operations. Yeah.
Well, that's it. We don't have much time left, but we must talk about this then. A long journey ahead for EOH before we can see it return to the darling of the JSE, the blue chip company that it used to be. Yeah. It looks like it might be a long journey.
Yeah, it does definitely look like it's going to be a long journey, but at least for now, it does seem as if the shareholders are there. Jabumo Leketi is another one who's now become the chair of the company, representing Lebashe, who is their biggest shareholder, and they've stuck out, you know, to EOH, even funding the parts of the rights offer last year. The other shareholders we've spoken to, they say that they're there for the long term, and everyone actually admits to say this is not going to be an easy path, and that we're likely going to see a bit of tension over at least the short term. But they do say that they're confident that they will be able to increase EBITDA at EOH.
Well, everyone loves a comeback story. We'll be watching very closely. Thank you, Mudiwa. That was Mudiwa Gavaza, a business writer for Business Day.